All right, this is Patrick Rogers, and today we have the privilege to have John Gillie on the show. And John is the founder and CEO of trucktractortrailer.com. Welcome to the show, John.
Thanks, Patrick. Thanks for having me.
You bet, man. So again, John founded trucktractortrailer.com to introduce a new approach in the online marketplace for transportation assets, products, and services. With a 25-year track record of building businesses, John's a preeminent expert in high-growth strategies, turnaround, and startup situations, especially adept at executing and monetizing innovative solutions to maximize enterprise value. As a private equity investor with deep board management experience, John has driven mission-critical assignments with private and publicly held companies ranging from pre-revenue to over 20 billion. So very, very successful there and impressive. Prior to TTT, Tractor Trailer, John was the CEO of MissionOne, which is a boutique C-suite and board advisory practice that he actually founded in 2013 and remains active in a mentorship capacity. From 2010 to 13, John was the chief commercial officer of First Group America. Prior to that, he was in various executive roles at ARAMARK, Republic Services, and Noble Biomaterials. After serving in the Marine Corps, John earned a bachelor's and an MBA in finance from University of Phoenix and completed numerous executive development programs, included those facilitated by ARAMARK, Harvard Business School, Penn State, and Cornell. John, very impressive background, very impressive resume. Can't wait to dive in. Before we do, what's one interesting fact about yourself that not many people know?
Well, thank you, Patrick, for the intro.
You bet.
I guess that I didn't become an entrepreneur until I was 54 years old. As you rattled
That's
off
awesome.
Aramark and my corporate career, I wasn't born into this. But having said that, I guess I was fortunate enough to work for organizations that were very entrepreneurial, where they attracted candidates that had all the attributes of an entrepreneur, but I guess didn't have the guts of the capital to do it on our own.
Yeah.
And not until I was, later in life, after my corporate career, was I able to make that leap. So I don't think people
Yeah.
realize that.
Wow, that's very impressive. 54 years old, kind of just resetting, restarting a whole. So digging into that, like, what was the stimulus? Like, what drove you to get to that place where you're like, this, I need to change. I need to do something totally different.
Yeah, it's interesting. I don't think it was one catalyst. I think it was a number of things. Having been on the road for years, managing national programs, international programs, and you just realize it was less about not making other people's dreams come true, because I always thought the companies I was working with and for, I was well compensated, and I was typically at the senior level where I was helping to drive strategy. But I really wanted the challenge of building something on my own,
Wow.
and putting everything I learned into practice. But it had less to do with really economic benefit and more to do with academic challenge and wanting to meet that challenge. And boy, did I. Yeah,
Yeah, that's awesome, man.
yeah.
Congratulations.
Thank you.
So tell us about your company. Tell us about Truck Trailer Tractor. What is it you guys do, and how do you differentiate yourself? Oh, let me see here.
Yeah. So it's trucktractortrailer.com. I know it's a
Yep.
mouthful. Uh, People call it TTT for short.
Yeah.
And we built it, the brand like that, very simple. Um, we the idea came to me about 7 years ago. I was in the city, had clients, and I was sitting with someone who was trying to do two things. They had a client themselves that was trying to sell a work truck, and
Mm.
then buy a new used work truck to replace the old used work truck. And this is probably 2016. This is not 1995. This is 2016.
Yeah. Yeah.
And the person had a stack of magazines, truck paper magazines. Truck paper is a leading publisher and player in the used truck market that we play in. And I just looked at that stack and said, dude, that business is in the cloud.
Mm.
Because what he was sharing with me, he was frustrated that the trucks that he was looking to buy were already sold, and he was having a tough time uh, getting someone to call him back to sell a single truck. And so we just socialized the idea about how easy it would be if there was like an Amazon or an eBay for used trucks. Now, long and short of it is, eventually, Truck Paper got into the online game. Of course, Ritchie Brothers and Iron Planet. There was players in the space, but not well publicized. It was still plenty of opportunity, still early days in the used equipment market,
Hmm.
that it hadn't quite yet gone online. And
Yeah.
this was only 7 years ago. But a lot has happened in the last 7 years ago. So the idea we had was to jump in and get at it. We didn't have to be first to market. All we had to do is build something a little bit better as far as user experience, and be
Mm.
a whole lot cheaper, which we are. And we could, grab enough market share and business to make a business of it. And we've done that.
Fantastic. So it's mainly selling secondhand or trucks mainly,
Yeah.
right?
Yeah.
Tractor trailer trucks. Very
Well,
cool.
first of all, Patrick, it's an enormous market. If you think about your background in the Navy, mine, the
Yep.
Marine Corps.
Hmm.
One of the things that people don't realize about the military, and when I was in the Marines, I was in logistics, so I was around a lot of
Right.
equipment,
Right.
is that it's a huge supply chain, and on in the global domestic product, transportation, logistics, and related services represents about 24% of world, global gross domestic product. So on
Wow.
its own, it's just one of the biggest markets on earth. And so the market size was amazing
Mm.
and just enormous. But yeah, so we really wanted to focus on a specific vertical, because you really can't be all things to all people. So we really lasered in on just the Class 8 over the road used truck market. Um, and in itself, it trades about 240,000 units a year.
Wow.
And we felt that if we can capture, 5% of that market,
Right.
we would have and built it as far as a pure digital experience, we'd have an asset of significant value.
Fantastic. Yeah. And that's sounds like that's coming along nicely.
Yeah, it's
Yeah.
it's it's hard, very hard to do, because what you're trying to do is replicate something that has been going on the ground
Yeah.
in person
In,
for 100 years.
right.
And you're trying to replicate that experience in the cloud in more of a remote virtual experience.
Gotcha. Yeah.
And but with the tools today, with technology, AI and ChatGPT, and just really the killer digital tools that are available, the gap is definitely closing.
Fantastic. Yeah. So you guys started this company in what, 2017, and you just didn't you say you just hit 4.5 million?
Well, we're projecting
Projecting
4 million revenue in
Yeah.
2024.
Yeah, that's
But
awesome.
I think for us, the most important metric is
Hmm.
we've created a revenue model and an operating platform that is profitable.
Mm.
We didn't want to have $4 million in revenue
And not be
and
profitable.
still be
Sure.
losing money.
Yeah.
So we've actually, on way less revenue the last 2 years, we've made money. So we have a profitable model. I think you mentioned earlier in our prep about the performance-based equity,
Hmm.
performance-based compensation of our team. I think helps with that, and also incents and motivates um, you know the team, who are
Yeah.
all
Yeah.
owners of
Yeah.
TTT,
Hmm.
really to focus on desired outcomes and profitable business.
So you brought it up. Let's dive into that. I think that the companies that are able to successfully implement a performance-based model, compensation model, can be very, very successful. And it really helps them bridge the gap between an employee who has an employee mindset and an employee who has that ownership mindset. So let's
Yeah.
dive into that. Tell us more about that program.
Well, first and foremost, there's most people, and it's not a bad thing, it just is, are really are employees, and they have a mindset, and they have other values and desires and motivations, other than rolling the dice on running their own business, right? They're very comfortable living a life and having a career where they are the employees. And you're speaking to one. I was one for 30 years. But I do think for TTT, what I wanted to create was an organization of owners, so to
Mm.
speak.
Yeah.
And um, I did have experience working for ARAMARK, where we had an equity program, and I just remember coming to work every day, not thinking I was an employee, but definitely thinking that I was an owner, a very small owner, but
Yeah,
I
but
owned a
still.
piece of it. I never forgot those days. And I wanted to, so when I had the opportunity to create TTT, we built an organization and a cultural structure around that compensation model with the deep belief that compensation structured correctly will incent and drive the desired behaviors. And we get that every day.
Love that. Yeah, love that. So how does it work on, some people set it up differently. Is it set
Yeah.
up on individual performance, like you measure a certain KPI individually and they get a revenue share
Yeah.
based off of that, or is it like a team thing with a tiered
Yes,
all of that?
it is a team based on revenue,
Mm,
and therefore we have everyone pulling towards that revenue, and it creates this sort of not internal competition, but this internal support network that
right.
everyone is marching for the
Mm,
same desired outcome,
yeah,
which is to make our monthly revenue number, right?
right.
And yes, based on role and responsibility, you may have a different revenue percentage, but
Mhm.
it's all tied to the revenue number. It's pretty interesting.
Yeah. And then so your team actually gets a percentage, but a certain slice of equity in the company.
Yeah.
How do you do that? How does that work out for you?
Well, again, it's based on role and responsibility.
Hmm.
We have, to really open this up. And by the way, we're closing our last investor this week. We're onboarding what I would call a strategic investor, someone from the trucking space. So it's a pretty big week for us. We're pretty excited. I'm excited about being out of the fundraising game, at least for a while,
I
because now we're
bet.
sold out and properly funded. But
Congratulations on that. That sounds like that's a big milestone.
thank you. We've had no problem raising money, and we'll get into that later too. But as far as equity percentage, we have about 38 owners of TTT, people that have passed through, worked on, for sweat equity, that have earned their equity. And either it was a short-term project or it was a long-term one. Everyone, we have people that own, 1/10 of 1%, and we have people that own up to, 7 or 8% of TTT based on either their contribution or their either of cash or of work. So I
Mm,
think we've done a fairly decent job. So when I say we, I mean myself and my board of allocating that revenue, allocating that equity out. One of the things, Patrick, that because you deal with um, owners and entrepreneurs a lot,
mhm.
is that you only get to sell or grant equity one time, and once that one share or 1,000 shares is granted, it's gone. So you got to be really really careful, right down to the single share who you're giving, where you're investing that
Absolutely.
equity.
Yeah.
Yeah.
Yeah. Very important stuff. And how have you found that having a program like this impacts employee retention, loyalty, and passion?
Yeah. So, passion is, you can't teach passion. So you have to do a great job recruiting for it and
Mm,
observing
hmm.
it, and
Mm,
also intellect and other,
yeah.
fits or attributes
Yeah.
to someone's capability.
Right.
And I'm really, really careful on bringing people on board, and having an experience in talent management and team building my entire career. I'm fairly skilled at doing it. If I do anything good on the team, it's acquiring talent, assimilating them in, and developing that team like structure. Yeah, so you got to be careful, and I'll just jump ahead to the outcome. is
Yeah.
that we've had our same core team for about going on 3.5 years now. Now
Nice.
we have a very small core team running the business, but we are digital, we're remote, and we have a great inner circle of support partners. But we run the business with about 6 core full-time partner and you know folks, core team members. We have another 5 um, support people, and we have probably a dozen or so partners that support us, support the platform, either through finance, through
Mm-hmm.
warranty, through inspection services, through technology. We don't
Mm-hmm.
have on staff developers or coders. We outsource that to Janelle, which is up, by the way, in Schenectady. Great team. Hey,
Yeah.
John Keller.
There you go.
Um,
Cool.
yeah, so we have a fairly decent retention of core team
Mm-hmm.
and our partners, but it all goes back to, you know, acquisition. It all comes back to selecting properly from the get-go.
So we might as well jump into it. One of the things you had said, that the business strategic move that's really helped you separate yourself is that ability to recruit and retain A players.
Yeah.
So what do you do, John, that has really helped you select those A players?
Yeah, well, so it's not just A players, but it's also investors and board members and partners, right? You got to be active. You got to be highly active. The gift from God for us is LinkedIn. I'm fairly active on LinkedIn. I know you are as well. I have, just organically grown my base of following to like
Yeah.
over 30,000. I don't know how that happened. It
Wow.
just does.
Yeah.
And it's really concentrated too. About 75% of my connections and following is in the transportation
Sure.
sector or investors that invest in transportation.
Mm,
So I'm really sticking to the core, but also I have strength in numbers too. And I think that is very helpful. You have to work it.
interesting.
You have to work your
Yeah.
network. You're as an entrepreneur, especially like myself. I'm a tech entrepreneur, but I'm not a coder. I'm only as good as the people I surround myself with.
Sure. Right. Right.
And but I also have an eye on bench strength, and so that I don't miss a beat if we do have turnover in either a strategic partner or, let's say, an investor we thought was going to come on doesn't come on. We're always fairly resourced as far as bench strength, and I think that's
Mm,
really, really important as an entrepreneur, especially as a CEO founder. Knowing right from day one that you can't do it alone. You're only as good as the top 5 people you surround yourself with,
yeah.
and the sooner you learn that, I think the better off you will be, and the probability of success.
Well, it's interesting. So, most business owners and recruiters in a company, right, when they have a position to fill, they put an ad online, right? Whatever,
Yeah,
ZipRecruiter or whatever, Monster, whatever it is. And it sounds like you are networking all the time. And
yeah,
do you even have, I know Jim Collins in one of his books said that the best, most successful CEOs,
yeah,
they have a Rolodex they of people that are wanting to get in their company that they've
yeah,
already had a 15-minute talk with, right?
yeah.
Is that you?
Yeah, yes, and
That's
I'm
awesome.
laughing because I remember when Collins was writing Good to Great, and he, back in the late
You're dating
'90s.
yourself, man.
I am dating myself, but I can really date myself by saying he was a consultant to ARAMARK back in the day, and I
Oh,
had a
okay.
chance to meet him.
Yeah.
So that's really dating myself.
Oh, wow. That's
But
awesome.
but if you look at the level 5, he talks about level 5 leadership.
Right.
You do have to have you do sort of have to be a beacon of talent. I'm not saying a Pied Piper, but you definitely have that law of attraction, and also I think that's built from having a good reputation for treating people fairly,
Mm,
helping people become successful, developing people, um, you know, um, rather than just recruiting people to come in and make me more
right.
money. It can't be
Right.
about
Right.
me. It's got to be about them. And why is this a good deal for them to be here with us? And why is it for the team to have this new person coming in? And I think we also do a very good job of, whether it's a new team member or an investor. Um, People think this is funny. I might have someone ready to give me a check, um, but we put them through like a round robin interview, right, to see
Mm,
if it's a good fit. Because the last thing we want is someone
yeah.
investing in something or a team they don't believe in or don't
Yeah.
fully understand.
Right.
And
Right.
likewise, we don't want to have our team disrupted by someone in the team dynamic, by an investor who may want to be active in the business. And so if there's a not a good fit there as far as cultural fit, you know, we kind of weed those out. But fortunately, we haven't had any issues like that.
Well, and it sounds like that's because you've really interviewed him, and I can't tell you how many people I've had on the show, John. That's one of the things they, some of their biggest failures has been wrapped around getting investors on board too early without that cultural fit, without them really knowing and being passionate about the product and believing in the people, because then they just become problems. When things don't end up turning out the way they want or exactly the way they want, it ends up being an issue down the road.
Yeah, there's no doubt. And so from a CEO perspective, you have you start to acquire different levels of debt. I call it debt, right? You have not just financial debt, you have technical debt, you have talent debt, you have legal issues. And I think as a CEO founder, especially, and I'm still the majority shareholder in the company, it's really important for me to manage my debt. And, we don't have legal issues. We have no financial debt. We have no limited technical debt. But really where I think we've been able to accelerate is because we don't have any people issues. And if we do, we call it out and we address it on day one. We don't let it fester.
No, that's fantastic. That is fantastic. Um, One of the things you had mentioned in our pre-call is that during startup, it took you twice as much and took you twice as long to get TTT to break even in profitability. What do you mean by
Yeah.
that?
And I was probably understating that. It's probably
Okay.
quadruple that.
Okay. All right. Fair
And
enough.
and I think if you and I before I jumped into doing TTT, of course, I talked to a bunch of people who thought I was absolutely crazy to do it. And a lot of experts, people way smarter than me, were telling me it's
Yeah.
going to cost twice as much and take twice as long. And I didn't believe them, right?
No,
Because
of
I
course
had
not.
this,
Hey, no, I got this. This is my dream. I've got this all handled. I'm good.
yeah. When you're in corporate America and you have all the resources
Oh
available to
yeah.
you,
It's a different
it's
story
much
here.
easier to turn an
Yeah.
idea into something.
Yeah.
But when you're, really strapped for resources, you might have a great idea, but to bring it to life, it is so difficult.
Mm,
I'm not trying to scare people away from, doing their startup or being an entrepreneur, but don't 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 underestimate the challenges as far as time and money. It's okay. It's okay to have a bigger range or a bigger, I would say, bigger guesstimate on how much money it's going to cost, and really approach it from a good, better, best, or a bear case, bull case versus
mm,
a firm number, because it's never going to be the worst case. Worst case scenarios never really happen, and it's never going to be truly your best case scenario. It's probably going to be somewhere in between, and I think that the earlier that an entrepreneur can come into a situation and assess
mm,
what the bear case is, the bull case is, and to get at that midpoint, I think everyone will be better served.
mm.
Um, but as I say that to you, Patrick, you have to go into it every single day, dreaming big and
Yeah.
executing against that big number. If not,
Yeah.
why are you doing it?
Yeah. It's funny you mentioned that quadruple thing. Was it the book Ready Fire Aim, Michael Masterson? I don't know if you've read it or not, but one of the things he talks about in there is whenever you're launching a new product or anything, estimate the amount of time it's going to take, the amount of money it's going to make, double that, and then once you get there, add another 25% to it, and you
Yeah,
might be on par. And it sounds
yeah,
like you live that real life. Um, Let me ask you, John, if you're going to hire a CEO to take the reins for your company, which you will one day, undoubtedly, what's the
yeah.
one book that you're going to require he or she read before taking over for you, and why?
Wow. So, one of the books that I was in Southern California back in the mid '80s, when I first got to California after the Marines, and took a course at Claremont College, where Dr. Drucker was teaching a course.
Yeah.
and I was again dating myself. But he had a great book out called Organization of the Future.
Mm,
And again, the book is going on 40 years old. First edition is probably closer to 50 years old, but the principles are the same. Is that it centers around people and process and technology, and talks about speed of execution. So I would say one book I would recommend from a legacy perspective, old school, would be Organization of the Future, and the future is now. The other book I would say, I know you asked for one, but I'll give you a second one, Ray Dalio and his
oh,
Principles
principles. Yeah.
series. And he's a mega billionaire. He basically gives the book away on his site. So if you can go to principles.com or Ray Dalio and follow him, I think he provides, at least for me, some pretty good guidelines and
Yeah.
guardrails to follow.
I love it. Thank you for the recommendations. John, let me take a few minutes and just kind of summarize a few of my key takeaways from today. One is this the concept of performance-based compensation model.
Yeah.
It really helps with retention, overall motivation, and just really, from your standpoint, transitioning their employee mindset to owners. And that was really what you sought out. How do I get my team members to think about the company as in their own ownership? And you even have equity ownership as well. So it's not just a revenue-based share model, it's an actual equity ownership as well that they can build over time. And the other was recruiting and retaining A players has been one of the keys
Yeah.
um, to your success, and not only employees but also other professionals, other investors, and you utilize LinkedIn like a pro to do it. And so you're
Mhm.
constantly networking. You probably set a certain amount of time a week to do that. We didn't dive into that, but you're networking. And also you're not just bringing people in. You're also developing your team, your core team, and there's really positive benefits, very beneficial for people, employees, to be at your location. And that culture that you create there also attracts people. And so you're constantly building and networking people to find the best people to bring in. The other one was don't underestimate the time and cost involved in starting a company. And I kind of added, or launching any kind of a new product, anything launching new. So, John, if there was one takeaway that you'd really want the audience to absorb from our time together today, what would that be?
Wow. And Patrick, I was hoping you were going to get to your service that you provide, which is helping companies like mine grow through acquisition.
Thanks.
Because really TTT, if you go to trucktractortrailer.com,
Yeah,
click on the leadership page, look at our
mhm,
board of directors, you're not going to find our investor core on there, but
right.
um, you'll see that a lot of us are, have been doing this for decades, and
Mm,
we've grown through organic growth and also
yeah,
bolt-on acquisitions, tuck-in acquisitions, and we're building TTT to be something bigger than itself. So what you
yeah.
see today is not where it's going, and it's really
Mm,
more like a platform
mm.
with plenty of opportunity for bolt-on services. For
Oh, wow.
example, we don't finance our own trucks. We have finance partners that do that, but you can argue that with you know a credit facility of a couple hundred
Sure.
$1 million, we could be toting a note ourselves, right?
Absolutely. You bet.
And that creates an opportunity for investors, venture capital groups that want to back something like TTT.
Yeah.
Um, so I think there's plenty of opportunity out there for if you're listening to this and from your network, Patrick, that are looking to partner with a company like TTT, or have us,
Yeah.
merge or have us acquire you. Let's talk. We're always open to the big
Yeah,
ideas.
great. I'm glad you brought that up. I've been consulting for 10 years and got into this acquisitions thing, and it's how companies can create absolute generational wealth and
Mhm.
growth far beyond any organic growth. And it sounds like you guys are tapping into that yourself. You're starting to.
Well, we had to get the core business done first,
Yep.
but I think we're uh, to a point where we have to start thinking strategically about
Mm,
strategic acquisitions, strategic uh, up to and including a merger with another something bigger than ourselves. So I think
yeah.
we're at that stage. Yeah.
Awesome. Yeah, that's fantastic. John, if any of our listeners wanted to reach out, and perhaps there's somebody listening that does want to merge
Mhm.
or any kind of a opportunity like that, or they have questions for you for some of the
Yeah.
leadership and management and strategic things we talked about, what's the best way they can do that, John?
Well, at trucktractortrailer.com, my all of my contact information is there, my LinkedIn profile. In fact,
Perfect.
the entire team has LinkedIn profiles on the site. We're easy to get in contact with.
Awesome.
Our core team, our board of directors, very much an at service type of group, and we're here. We're here to help. So whatever we
Cool.
can.
John, thank you so much for being on the show. This was a fantastic episode. So many great pieces of advice in here.
Thanks, Patrick. Appreciate it.
Yeah. And for the listeners, please hit the like and subscribe button and help us spread the word about the show and what we're doing here. We're helping the next generation of CEOs and leaders be that much more successful. With that, this is your host, Patrick Rogers, and we'll see you in the next episode. Thanks a lot.